Hi, this is Bill Wood of Disciplined Trading Decisions. Thanks for stopping by. We're going to be analyzing crude oil, S&P 500, and gold using Elliott wave and maybe even some market profiles. So stick around. But first,
trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results.
okay, so we're going to start off with the ES. That's the S&P 500 E-mini, and we have a monthly chart here, and we basically have two counts, a bear count and a bull count. So how we're getting to this count here is we have 5 waves here, 1, 2, 3 all the way up here, 4, and then 5. Don't really like this 5th wave here because it looks like it's 3 waves instead of an impulse of 5. I can show you how I counted that later, but the basic idea here is that we've had our 5 waves here, and we're coming down for an ABC much lower, maybe down into 1800s. So the question is this B wave finished yet? And I'll get to that in a minute. Here's the bull count. So you can see the bear count where you have 5 waves here. The bear count says that this is wave 3, 1, 2, 3. And instead of this being a 5th wave, this is an expanded flat. If this is an expanded flat, then this would be wave 4, and we're looking to break the high. So let's take a closer look at the bear count first of all. So on this 6-hour chart, you can see that here's your 5th wave, 5 of 5 of 5, and you could say the bull market is over. We would be expecting a really large ABC or type correction. So here's a possible ABC. Here's 5 waves for A. Here's 3 waves for B. This is a 61.8 retracement of this wave A, and that's typical for a wave B. Then if that is the case, then we're expecting 5 waves down, maybe down to 1800, maybe 1700, or somewhere down there, or lower. It could go much lower. Okay, if this is the case, then we've already had wave 1, and wave 2 cannot break this high, cannot break this high there. Wave 2 cannot break that. Otherwise, this count is incorrect. And if we're actually in a, if this is not an ABC correction, if this is actually a 4th wave down here, let's take a look at that. So if this is wave 4 here, we had this expanded flat, wave 4, then we're expecting 5 waves up to break this high. Whether that's going to be an impulse wave or maybe a diagonal. So my problem with this count is that this wave 3 does not look very impulsive. Really, it should be cranking up here. And so I thought that this week was going to be the week to tell if this was the B wave, if this B wave is over and we're going into this down move, or are we continuing up in the third wave? Well, the market doesn't play by my rules and by my timing. So yes, this could be a wave 1, 2, and 3, and we could explode lower. And you know how news is driving this market. So it's still, in my book, it's still either way. I still kind of like this down move. The only problem is that this second wave is really retraced really far of this wave 1. So I don't like that. And what I don't like about this 3rd wave here, if it was going to go higher, is this doesn't look very impulsive to me. So I'm sure by next week, I'm sure next week is really going to show its hand of what it's going to do. I'm sure of it. In fact, I would bet on it if I was a betting man. So that's what I'm looking at. It's either going to go up or down. So this is either an impulsive wave up. We're going to break this high, the all-time high, and one of the things that leads you in that direction is NASDAQ. NASDAQ is near its high. Or is this going to roll over here? All right, as far as the ES goes, let's give us a little more room here. This high here is a poor high, and oftentimes poor highs are revisited. All right, on market profile, another hint that this is going to go higher is that this could be what I thought was the top of the B wave. Well, it has a poor high here. There's no rejection up here. So that's another argument for it going higher. We gapped up on this day. Could not fill this gap. So that's bullish. We ended on a bullish spike at the end of the day. That's bullish. We had rejection down here. Value is steadily getting higher. So maybe I do like the bullish count. I just don't like that wave 3 doesn't seem impulsive. So maybe this is going to be an ending diagonal on wave 5. Who knows? All right, so I'm sure this coming week is going to show its hand. All right, on to the next. Okay, next we're looking at gold. Would like to get me some gold. My wife would like me to get her some gold. So I have two counts. I have a bear and a bull. Here is my bear count where I have 5 waves up, right? And this big section here is just part of the correction, just part of the correction. I have 5 waves down for A, and I have 3 waves up for B, all right? And so I would expect C to be down here like that, okay? So I would expect C to come down here like this. So that is the bearish count, all right? So I also have a bullish count, and this is the bullish count. Here, we're not finished the 5 waves yet. I have 1, 2, 3, and then here's 4 down here. This would be a complex correction, W, X, ABC for Y, X for Z. So this would be wave 4. Wave 4 does not come within wave 1, so we're fine there. And so we would be looking for 5 waves up. So here's your 1, 2. Wave 3 is made up of 5 waves. And it looks like we have wave 3 complete here. Let's drop this down to a day. Okay, so here's your 5 waves for wave 3. We have wave 4, and how am I counting this? This could be the completion of wave 5, and this is the bull count, right? So you would expect an ABC down here for 4, ABC for 4, and then this bad boy go up, all right? That's what you would expect. Well, it's not doing what you would expect for the bullish count. So what we could have here is, instead of an ABC, what we could have is a triangle. Here's your, it looks like 5 waves though. A, B, C, D, and this could have completed E right here. We'll see for a wave 4, and then going up from there to wave 5. So here is your A wave from here to here, and generally your C wave is like 61% of that A wave. So it's met that. So if we were to measure the B wave, from here to here, the D wave is usually 61% of the B wave, and that worked out really nice. And then the E wave, I wouldn't say that it's 61% of the C wave, because oftentimes it's faded, it's front run, but it should be three waves here. That could be 3 waves. This E wave could be finished. So that would be the bull count, and we would go up from there. All right, the bear count, how is that looking? Let's drop that down to a 2 hour. So if this was going to be the bear count, here's your B wave, right? Wave 1, wave 2. Maybe your wave 2 could come up here, but here's your wave 2. Wave 3 should be an impulsive wave down. We're not seeing that so far. Like I said, this looks like a triangle for an up move. So right now, I'm kind of biased toward this. So that's what I have for gold. Kind of leaning toward this right now, and this might be over. So we'll see. If we break this D high, that's probably a good signal that we're heading higher in gold. All right, so that's it for gold for right now. Okay, last but certainly not least, in my heart, I love crude oil, so it is not last. So here's crude oil. This is CL, the future CL, and right now I have a couple different counts on here too. So this would be a 5-wave impulsive move, and from here all the way to the right, this is a monthly chart, is a complex correction. So is this correction number one, is this correction over? Is it just about over? Or could it go on for another couple of years? So here is one way to look at this correction. So you have an A, B, C for a W, you got an X, and you got a Y, all right? And if this correction is going to last longer, then maybe this Y is finished and we'll go up and do another X, and then another Z, maybe just break that low. Okay, so that's one way to look at it. Here's the other way. Here's your 5-wave move. I have 3 waves for W, X, Y, and this correction, multi-year correction, is either over or just about over. So let's take a closer look at this last wave here. Okay, so we have a couple of different ways of looking at this end. So the X wave would be up here off the side of the chart. You have an AB, here's the B wave, and now you're looking for 5 waves for the C wave, all right? And that would complete this. I mean, wham bam, thank you ma'am, the correction is over. And so this is what that would look like. 5 waves for C, right? 1, 2. Wave 3 is made up of these 5 waves. 1, 2, 3, 4, 5. And then an ABC for 4. And we go down another 5 waves for Y. And then the market can resume its upward path. Okay, so that is one way to look at this. Another way to look at this, again, we're going to say that this Y wave is over, and then we're going to have an X and a Z. So for this Y wave to be over, let's zoom in. Okay, here is your B wave, and again, we're making 5 waves for C. Here's your wave 1, 2. Wave 3 is made up of these 5 waves, 1, 2, 3, 4, 5. Got an ABC for 4. And 5 waves down for 5. Let's look at this on our chart. So here's your wave 4. I have 1, 2. Doesn't want to light up for me. 3, 4. Right? 3 and 4. And then 5, which would be the end of Y. So this could say that this is the end of the correction, or one more wave down would be at the end of the correction. or this is the end of the Y wave. And next we're going up for X and then a Z. So if this is the end of Y, we're looking for 5 waves up for an A. And so we could have 3 of those 5 waves in. What am I expecting? I'm expecting a deeper pullback for 4 if this wave 3 is finished, and then resume up for 5. That's on the bullish count that this Y is finished, and we're moving up from there. Or the bearish count would be that we just completed 4. We're looking for 5 waves down for 5. Now this is pretty steep. This leg here is a 1.382. It's still acceptable of the A wave here. So here's the bottom line. Bottom line is we're going down for one more leg to finish Y, or we've already finished Y. And we're either going up for a new bull market or we're going up for X wave to stretch this out, another 2, 3, 4, 5 years. Well, that's all I have for you today. Remember to subscribe and hit the little bell icon and like and make some comments. That would be great. I would really appreciate it. And you can check out my website at disciplinetradingdecisions.com and go there for some free resources. If you look down in the comments below, I'm going to have a special offer for you today. You can check that out too. Well, thanks for stopping by. This is Bill Wood of Disciplined Trading Decisions signing off.